What's going on, guys? Welcome back to another video. In today's video we're going to talk about AMC, GME as well as the broader market, and after that we're going to check the options flow for all three of them. So wow, what a day today. There was a rebound that was just unbelievable that happened in the SPY, in the overall broader market. All of these stocks were down pretty badly in the pre-market. Everything was going down just because Russia has already invaded Ukraine, which sent the fear into the broader market. Russian index was almost down 40%, which is just completely out of control. You cannot imagine a US stock index, especially a SPY, can go down 40% in any case. Though they have safety measures, if the SPY go down more than 5%, they're going to suspend the trading for the day. There are certain rules that have been implemented just for that drawback. Now, when we look at AMC, it opened at $14.97. That was just out of control sell off that was happening in AMC. And then it had a high of $17.77. So the average volume on AMC is around 50.80 million, but today's volume was around 53.100 million. So you can imagine investors are still betting on this stock. They are buying this stock no matter what happens. And today was one of the most unique days. I would say it was a complete crazy day. We have never seen something like that happening in the market before. But in my personal opinion, what happened really is, as soon as the market opened, a lot of people were buying puts, and that can be easily seen by the market maker, and then they let the stock market go up. This is just in my personal opinion, allegedly, but that's what I believe, that's what happened. Now, when we have a look over GME, it opened with $105.53 and it ended up a high of $125.71. The average volume on GME is around 3.08 million, but today's volume was around 2.24 million. So you can see the volume in GME was not above the average volume. See, the stock price went up. It is definitely in the hands of market maker how they want to make this thing go up and go down. Now, in just another less than 15 days, we're gonna get the CPI number for the month of February. And the inflation number is higher than what it was in the previous month. The stock market is gonna tank seriously because on the 16th of March, we are having the Fed meeting in which they're gonna decide how much points they're gonna increase for the rate hikes. If the inflation number comes a little bit way too much more than what they are expecting for the month of February on the March 10th, then definitely the stock market is going to tank. Now let's have a look at the SPY. The SPY opened with $411.02 and it ended up a high of $428.76. This is just absolutely crazy. SPY doesn't move like this. So what it's trying to tell you is this, that it was down initially more than 2% and then it went up almost 1.50%. And like I mentioned in my previous video, in the options flow, I showed you that there are some individuals, those who are betting with very heavy amount of money that the SPY is going to go down from here onwards, and that's what exactly happened. Now, when we have a look at the Amazon stock as well, it went down to $2,796.75, and then it went back up to almost a high of $3,034.98. So you can imagine this kind of a movement doesn't come in these big stocks. Now, what they are trying to do, market makers, they are just basically hedging the put positions the individuals were buying this morning, especially the retail. Because by looking at the broader market all around the world, in Europe, especially by looking at the Russian index, it felt like the SPY is going to go down a lot today, but nothing happened like that. And even in European market, the UK market, the French market, the German market, they were all down 3 to 4% in the morning, and then suddenly there is a rebound that came in the US market. Now let's have a look at the options flow for AMC. So by looking at the options flow today, one trade came in that was for $1.8 million, and this individual is buying a $25 put on it, and it's having an expiration of 329 days, and these are 1,300 contracts, and he's betting that the stock is going to go down from here onwards. The majority of the big whales are onto the downside for AMC. When I bring down the premium a little bit and see what basically the retail is doing, There are a lot of individuals that came in with a call option on AMC today. They are betting that the AMC is going to go up from here onwards in another 7 days time. That's a weekly expiration that they are playing, but it's a very risky bet. But they are betting that the AMC is going to go up from here onwards. There were a lot of call buying happening finally in AMC. This is after a very long time. We are seeing a lot of people buying calls, or else what we have been seeing in the AMC option flow was everybody was betting that the AMC is going to go down from here onwards. Let's see how this is going to play out, but just in my personal opinion, I think this is a complete trap. Now let's have a look at the GME. So what the whale are doing in GME, they are again onto the put side. This was a trade that came in. These are 20 contracts this individual is buying, and he's paying a premium of $185,000, and he's buying a $195 put, which is going to expire in another 7 days time. When I bring down the premium a little bit, I can see the retail is just bending towards the downside of GME. They are all betting that the GME is going to go down from here onwards. This is for the first time I'm seeing something opposite happening in GME. Usually GME gets the call options and AMC get the put options, but today it's completely opposite. AMC is getting a lot of call option and GME is getting a lot of put options. The rest, there was nothing suspicious coming out of the options flow for GME. Now let's have a look at the options flow for the SPY. So today, after the market opened, the market started going up. There were few put option that came in today. One is for 12.6 million and another one is for 12.8 million. And they all are betting that the SPY is going to go down from here onwards. There was another one for 14.4 million, another one for 20.5 million. There was 22.3 million a call option. This individual is betting that the SPY is going to go up from here onwards, but the majority of the big money is on to the downside for the SPY. There is another one 15.5, 10.9 million, 13 million, 11.9 million, which all are going towards the downside. This is a very risky bet this individual is paying. He's betting that the SPY is going to go down from here onwards, and basically he's already losing a lot of money. That's a $13.9 million bet which is going to expire in 3 days, and he bought it when this SPY was around $412.40, which has completely gone against the bet that he was placing. I mean, playing these weekly options could be very risky, and especially when you're playing in a 3 days time. This individual was experiencing the FOMO. He expected that the SPY is going to go down further at the market open, but exactly opposite happened, because when I showed you the price of the SPY at open, it was around $411 and he bought it around $412. So this is a FOMO mistake that this individual has made. He doesn't even have enough time for the recovery of his money on this trade. But let's see how this is going to play out. It might turn around. When I look into the last 7 day trades, the trade that I mentioned you yesterday was this $43 million bet, which is going to expire in another 84 days. Is still there. This individual hasn't sold off his position. He might be up big time when the market opened, but he hasn't sold his trade yet. He's still holding on to that trade. The rest, there was nothing suspicious coming out of the options flow for this SPY. Hope so you like my video. Please like and subscribe my channel, and I'm going to see you in the next one. Cheers.